Financial management for non-profit organization is what we are going to speak on today's video. The financial management and NPO is the fulcrum of the presentation. Now, what are we looking into it? See, the best realization of a mission is measured by the maximizations of the stockholder profit. This is true for commercial projects. This is true for social projects. It's all about finances. It's all about profit. So see the delta variances that we are looking out here. The financial cost, what we are looking out here for the financial cost factors, and there can be number of factors. The critical cost factors 1 plus y, and the return in terms of years. See, so factors, number of one factor, number two factor, number three factors, numbers of factors in years as far as. Then we have the salvation values that comes around here. For example, how we calculate the realization of the general aim for profit financial management. This is what we are looking into it, the operating costs and the capital expenses. Now, what are we looking, and what is the point of return for every years of operations that the business is into it? That will give me the total values for my project. So a general example for you to understand is you purchase an automobile for yourself, for your family. Yes, definitely yes. You have the cost price, obviously yes, and the number of years that you run that automobile, definitely. So what you can do is your cost price is something which is happening out here. Cost price by the number of years that you go around it, you can divide it down, and you can then probably segregate for each year what was actually your cost price and how was it related to your income. Also take into account that at the end of a stipulated time you decide to get rid of your automobile altogether. So what will you do? Either you go for a buyback arrangement with the company, or you sell it off in the pre-owned market, in the seller's market, in the fleece market. You will get a salvation value, right? So that would be a total thing. So you have your fixed cost minus the salvation value and the amount of years that you've already utilized. You will have a variation, the flow that the automobile has given to your, the value that it has given to you over a period of time. So 10 steps to value. Remember, this is what is very important. The CR, the operating cycle. Remember the capital requirements, right? The operating cycle, the asset propositions or probabilities, capital invested, capital structure, the fixed cost of fund flow forecasting, how the returns are going to happen every year. The IRR, internal rate of return, was the rate that goes around it. In cases of your automobile, the internal rate of return would be 10%. Was your salary, was your income increasing by 12%, 15% on an annual basis? If so, it makes sense that automobile has added value to you. Cost of the capital or CC, and the value, the total value that comes around it. So we have those 10 steps that needs to be ascertained to understand for a non-profit organization what has happened, the operating cycle, the capital requirement, the assets, the asset life cycle, the probability of the capital invested, capital structure, fund flow state forecasting, internal rate of return, capital of cost of capital, it can the interest rate that you are paying, and the total value that change around it. So non-profit finance cases would be all about hospital, let's say a social organization, medical organization, a school, a college, of something of primary, cooking, musical, religious based, probably something which you to do with your idea, which you are passionate about. Example, drunks, ex-addicts, or AAA, Alcoholic Anonymous Associations, donation based on the workshop methods, as on when on basis, community businesses, water supply institution, you name it, which helps you to improve the quality of life, which helps you to streamline the societal work orientation, which helps you to bring an order in the society as such. These are my non-profit finance cases per se. With this, I come to an end of this presentation. Thank you for watching this video.